splendid evening it is to you viewers. Thank you for joining us as we broadcast here from EquityAxis, your area perspective of developments in the Zimbabwean economy and of developments in around the region. Thank you for joining us. Let's get on to business. Security Exchange Commission says it is working to amend its act and framework to conform with the international standards and be admitted into the International Organization for Securities Commission. We attended the very first annual general meeting held in the capital this afternoon. Our EquityAxis team gives us the footage.
Again, like any institution, we are also driven by this. We want to protect investors through the provision of an optimal regulatory environment that promotes fairness and the sustainable development of capital markets for national economic growth. Now, I know I didn't go into that much detail about it, but essentially, capital markets is a means of raising capital. And when you speak to any politician, to anyone in government, or anyone in the economy, all they speak about is lack of capital. So economic growth really cannot happen if this market is not efficient in channeling those savings, from the savers like the pension funds, insurance, and any other investing institution to those companies. It could be government, it could be private sector that need that capital. So our mission is that we want this to be done in the most efficient and effective way possible.
That was Mr. Chinamo, the Chief Executive for SECZIM. In other stories, CBZ today held an analyst briefing in the capital, publishing the financials for the half year to 30 June 2019. Revenue grew to $47.9 million in Zimbabwean dollar terms, while they reported a profit after tax position of 137.4 million Zimbabwean dollars. Balance sheet reflects a growing non-performing loans ratio. Well, let's just have a look at the footage from that analyst briefing. Visuals there courtesy of 263 Chat. Let's have a look.
On the balance sheet structure, it is important to note that this is in compliance with regulatory requirements. The bank liquidity ratio closed the half year at 75%, giving a 45 percentage points buffer. The increased lending, as alluded to earlier, will reverse the loans to deposit trend and lower the liquidity buffer. The bank's regulatory capital adequacy ratio at 32% was 20 percentage points above the minimum required of 12%. On advances, asset quality is always critical. Besides the enhanced lending philosophy, which the group is always following, we have deliberately maintained a high level of provisions, as demonstrated by 123.7% total provisions to NPL, above 1 times security cover and coverage ratio of ECL to NPL of 1.2 times.
On NPLs, certainly the NPLs have been high, which is, I think, reflective of the environment. The environment is that of very high unemployment, companies are closing given the challenging circumstances. So NPLs as such are expected to be high. I have to say that they've come down somewhat, especially since our last reporting days. The strategy is not to outsource the management of these NPLs. There is value in us recovering. So the focus is going to try to recover on non-performing loans and not to outsource that function.
On the balance sheet structure,
the reporting galore continues, with MEDTECH posting an $8 million loss in the half year ended 30 June 2019. Their bad performance is attributable to a legacy debt that has affected their ability to import. Much of what MEDTECH does is predicated upon their ability to import, and now with their inability to service their foreign debts, their foreign suppliers have since stopped supplying them with some of their key products. In other news, UNTU Capital adopts a cautious approach to lending, with their loans and advances declining by 5% to $7 million in the half year ended 30 June 2019. Beyond our borders, Airtel reports a $47 million loss where the East African region is concerned. Also in that particular report is the fact that they have recorded significant growth in their Ugandan market. Indonesia President Mr. Joko Widodo orders a review of insurance premiums after a series of mass action in that particular Asian country over the weekend. This followed insurance premiums hikes that had been announced by state insurer. This concludes our evening news bulletin. Thank you for watching. Don't forget to like, subscribe, follow us on Twitter, Facebook, and to visit our informative website. From the EquityAxis team and I, Donkey, and good evening.
Climbing to the top takes more than just hard work and smart choices. It's the passion that drives you from within, the endurance to keep going through difficult times, and having a very clear vision of how to succeed. That's what we strive for at CBZ. We're a diversified and innovative listed financial services group in Zimbabwe, with a complete range of activities, including banking, short and long-term insurance, asset management, and property investments. CBZ has been a pinnacle for stability in the economic landscape of Zimbabwe, stemming from our deep-rooted values, our excellent customer service delivery, and our corporate vision to strive for excellence as a global competitor. Our continuous investment in research and development will cement our promise to provide customer convenience utilizing state-of-the-art technology. Relationships are at the core of what we do. We understand, however, that strong, long-lasting partnerships are not built overnight. With over 3 decades of wealth management, we have come to understand our clients and their specific investment requirements. Our unique mix of skills ensures that investment opportunities are examined from all perspectives. The balancing rocks of Zimbabwe have weathered the elements for thousands of years and stood the test of time, like majestic reminders of the fine balance of nature. They challenge our perception of what is possible and what endures. Just as CBZ has weathered the economic storms and remained steadfast throughout the turbulence of unsettled economies. Achieving the impossible through resilience and stability, we balance the elements of hard work, dedication, and experience, making us your ideal partner for success.